Most of us have gone back to work from office, but many are working on hybrid mode, which allows them to partially work from home and office. As a result, the demand for real estate, especially bigger homes with good amenities, remains strong. ANAROCK's latest reports showcases that housing sales continue to march ahead despite interest rate hikes from central banks. In fact, the residential sales in the third COVID wave surged to 99,500 units. To find out what are the factors aiding the real estate demand, we have now Anuj Puri, chairman from ANAROCK Group. Anuj, good evening. Welcome to the show. So, real estate prices are inching up, and so is the interest rate. How is the demand scenario currently?
Hi, Kavita. Thank you very much. Always a pleasure to be on your show. And it is true what you said is that the demand has continued to remain very, very, very strong. We are expecting till the end of September, this is going to be breaching the full year sales of 2021 calendar year. Essentially, if you were to look at the first half of the calendar year 2022, we had nearly 74% of the sales that had happened in the full year 2021. So really a very strong year. August usually is a very tight month, because of the monsoons. And this year, August has been the best in property registrations in the last 10 years. So the demand has continued to remain strong. It is also true what you have said is that the property prices are inching up, and so are the interest rates inching up, and the demand isn't coming down. So what's the reason for that? I think four or five things. One is that the property prices that have gone up this time, the developers haven't shown greed. So the property prices, the way it has gone up, it's really between 5 to 6%, which is how much the input cost has gone up. Second is the interest rates, whilst they have gone up, they have come to the pre-COVID levels. Third is that the demand, just from the need, the urge to buy a bigger, better owned apartment rather than living in rentals, has been extremely strong, not only in India, worldwide. And we're seeing this come through a lot more with good, reputed developers. And that's why you're seeing most of the listed developers showing excellent sale because the buyer is wanting to go to a well-governed, disciplined, reputed developer who in the past has delivered, and most of them largely have been listed players. So as a result of which, through the consolidation, listed players continue to do very well. But overall, the market remains very, very buoyant, despite slight increase in the capital values and increase in the interest rates. But these interest rates are about the same as pre-COVID level.
All in all, what kind of cities are we talking about over here where the demand has gone up, and what are the kind of homes people are buying?
So, Kavita, it is Mumbai. I don't know what's happening in MMR. I mean, MMR is now nearly 50% of India's sale by value, not by volume, by value. And it is understandable because the property prices are very high in and around Mumbai. So the MMR region is about 50%, followed by NCR, followed by Bangalore, and then is the rest of India. Between NCR, Bangalore, and Mumbai, we're talking about 80% of the total tier one residential sales, and that has remained strong. Where the demand is largely coming in is the professionals, IT professionals. They made a ton of money. Their salaries have continued to go up, good bonuses. Their demand on the product side has been villas, plotted sale, larger apartment. Luxury has done phenomenally well, more so in Bombay. And this is true luxury. I mean, we were talking in excess of 15 crore per apartment, and that has done very well. And clearly, second home market, which is like in Bombay, Alibag, Lonavala, Khandala, those places as second homes has done very well in these times.
Mhm. One thing you mentioned about luxury going up, the demand is high in this segment also. What is the reason there?
I think several things in this, Kapita. One is many of these families were living in joint families, and as joint families now, having lived the last 2.5 years, so closely, they do want a little bit more space. Second is, I think rich have become richer, so as a result of which they have more money to be able to buy. But more importantly, we are seeing is that the luxury units would sell once they are completed, because that's when the buyer can touch and feel. And majority of these luxury units, whether it was in Gurgaon or Bangalore or Mumbai, got delivered during this COVID time. So as a result of which the buyer could visually go and see, touch, feel, and take immediate possession of these luxury units. And that's why the demand and the sale really propped up.
What is your analysis for the festive season?
So I'm very bullish, Kavita. I mean, as I said, in the first half of the year, 74% of the sales compared to full year of 2021, and we're just stepping into the festive season. August again, 10-year high that we have seen it. I do feel is that you will have some festive offers coming in from the developers. They're also looking at this as a very big festival season. Many of the developers have timed this for the festival season to come in. There are a lot of new launches that are being planned. So I do feel is that it'll be a very strong festival season, barring if there's anything that happens at a sort of global economy which shadows the enthusiasm. Other than that, I do not see any concern. The Indian economy continues to remain strong. Real estate market is strong, and the demand continues on the real estate residential side, very much driven by the end users.
Any specific area or pocket that you would want to talk about that has surprised you and got a new trend in terms of demand?
I think two or three things. One, as I said, is these plotted bungalows, uh, second homes. I did not think that that would pick up the way that it has picked up. Second, Kavita, I would say is some of the tier two cities have really, really surprised me. Lucknow, Bhubaneswar, Ranchi, Indore, Bhopal, Nagpur. These are cities that have really surprised me. Before COVID, they were not as vibrant, and the consumption of residential wasn't as high. Now, I don't know what the reason is. Is it because some of the IT professionals went back home, and some of them are still continue to work from home, or they realize that they do want to, at the time of retirement, come back here and hence have invested in those cities? That's a new trend that I had not expected. Tier two, tier three cities have had great consumption on the residential sales. And these are, again, end users who are buying it, not investors. Um, at the peak of COVID, we had seen the NRIs, more particularly from GCC, Middle East, Gulf area, come in. That demand has slowed down once again. But I would say is peripheral plotted bungalow second home and tier two, tier three has been a new trend that we have seen, which has come back very strongly.
Last question to you. Do you think this demand is going to sustain for a long time, or as we are seeing the interest rate going up, people would really overthink or rethink their decision to buy a home? And is it the right time to just go for this purchase if you've made your mind?
So, Kavita, it's $1 million question. How long would this demand sustain?
Yeah.
Surprisingly, it has sustained. We thought that it was pent up demand after the first wave, after the second wave, but it has continued to, go on, and it has continued to sustain. My thought is, Kavita, that for the longest time the real estate prices hadn't gone up, whilst the incomes went up. So the affordability has become quite easy for the home buyer today to be able to buy these residential. But I do have concern that if the prices of real estate continue to go up with the increase in the input prices and your interest rate goes up, and the savings then start to come down because inflation is high, it can have impact on the demand for the residential sales. Uh, but I do feel is up to another 100 basis points of the home loans, the market can absorb it, and maybe another 3 or 4% increase in the sale price of the product, the market can absorb. So if it was to go beyond, 10% increase in the price from pre-COVID level of the real estate, and beyond 100 basis point on the home loan rates from where it currently stands, it can have an impact on the demand.
All right, so that's a reality check of the real estate market where the growth story continues. Thank you so much, Anuj Puri, for removing time and helping our viewers in this big purchase. Thank you so much.